Hi, this is Joseph. It's Thursday, July 3rd, 2014. Today was Non Farm Payroll. Normally, we would see Non Farm Payroll on Friday, but today it was released, and that is because tomorrow is a major US holiday. This trade right here on the pound dollar, the 30-minute time frame, this is an HL30. And you've probably seen several videos on my website about the HL30. I created this HL30, and what I was doing when I developed this method is I was watching the overnight ranges of consolidation. So I'm going to detach the charts here. I'm going to go right to that rollover period, and you can see that on this particular pair, it was in a relatively tight range of consolidation. It wasn't on all currency pairs at this time for Wednesday, but there are times when it does that. And what I noticed when I first started trading back in 2001 and 2002 is that, and I used to hear this saying quite a bit, is that markets are inside of consolidation 70% of the time. I don't know how accurate that is, and I know it's always depending on the market environment. If it's trending, it obviously isn't going to stay in consolidation for very long. But you get that period where you see the move that lasts maybe 2, 3, 4 hours, and then it starts to move sideways, and then you get another wave of activity. You can see it here, and then you can see it once again in the middle of the chart. But over here, it's that range of consolidation. And I started referring to it as that overnight range of consolidation, meaning that the London session is closed, the New York session is closed, the Asian session is just coming online, and here you start to see price move sideways. And it's approximately in the middle of that range right here, in the middle of this overnight consolidation range. What I noticed is that if the ranges are significant, or if the highs and lows are very obvious to me and I can clearly see them without a lot of confusion, because sometimes highs and lows are pretty choppy. If it's really choppy, I just stop looking at it. I'm not going to force a trade. I'm not going to continue to stare at a chart if it's too hard to read, because that could create a situation where I might force a trade that I'm not too sure about, and I might try fitting something where it doesn't belong, and I might try to execute a trade where it just isn't, where it doesn't make sense. It doesn't make any sense because it's not clear to me. It might be clear to somebody else, but if it's not clear to me, I'm not going to execute the trade. So what we have here is, when I developed this method, I started looking at the previous day's highs and lows, and that's why I call it the HL30. It's the high and the low from the previous day on a 30-minute chart. And when price reaches either the high or the low of the previous day, there is often a reaction off of one of those two levels, and it's a reversal. And I started to realize that with the euro dollar or the pound dollar, I could pretty consistently trade it to reach a 20 pip target. So I get into the trade on a reversal candle pattern, and then I use a 20 pip target and a 20 pip stop. And it worked really consistently. Now, I have to admit, it does experience a losing trade every now and then, but it's still over 70-80% reliable, 80 being the perfect market conditions for it. There are times when, if price is going to continue to trend for whatever reason, then it might fail. But I have some strategies that I teach that will help you eliminate some of the losing trades. So as a trader, you're always looking to improve your performance, but also to minimize your losses. And in order to do that, you've really got to understand the trading strategies that you're using and know the optimum times to trade it and to use that strategy, and then to know when it's not the best conditions for it, and then stay away from it if those conditions are taking place at that time. It really takes a lot of experience, and I've been using this strategy for many years. I've been teaching it for a long time. I've been teaching these strategies since 2007. So it works all of the time in all market conditions. But again, you have to realize and understand when to take it and when to use this technique and when not to. That's the real key. So I teach you how to do that if you want to learn how to do it with the trading course. But again, if you're afraid to execute these trades, but you still understand them, you can let me do it for you. You sign up to use the Trade Copier, you install it on your MT4 platform, and then the same trades that I'm going to show you today, all of my students got today. Because the Trade Copier automatically executes the same trades that I do. That's the 5 p.m. rollover period. Remember, we're using this on a 30-minute time frame. This was before Non Farm Payroll. Now, I need a 10 pip range. What that means is that the prior day's high was here at 1.7175. So I need price to approach the high within 10 pips. So it needs to at least reach 65, but it cannot go beyond 10 pips higher than the previous day's high. So if it went to 85, I would cancel the whole thing, but that's not what happened here. When the rollover period occurred, let me go ahead and open this up. I know it's going to change things around. Sorry about that, but I want you to see exactly what's happening here. when the rollover period occurred, it was already approaching that 10 pip range. There's 75, the high, and this high here is 65, 1.7165. So it reached that 10 pip range. Sometimes it's going to go higher. Other times it's going to go right to that 10 pip range, and then yet other times it won't even reach the 10 pip range, so I won't trade it at all. But it was an HL30. I have a worksheet and a checklist if you want to learn how to use this strategy, and it walks you through step by step. Number one, identify the high and the low for the previous day. Number two, wait for price to reach that 10 pip range. It did that. Once it reaches a 10 pip range, I wait for a reversal candle pattern. Now I have to admit that this first candle, the first red candle after the rollover period, was a reversal candle pattern because to me it was somewhat engulfing or approximately the same size as a previous candle. I like to see it engulf obviously a little bit more than that, so it would be a classic definition of that engulfing candle pattern. So I waited a little bit longer. The second candle wasn't good enough for me, and I waited for this candle right here. This was my sign of strength, or at least a stronger move to the downside. And then at that point, once I have my signal candle, and again, they're always going to look a little bit different, the patterns. They don't always look this clean. Sometimes I've got to wait a little while. Other times I don't get an entry right after the rollover. Sometimes I have to wait until the New York session. Every day is different. It all depends on the market activity. So all I can do is follow along and make sure that I follow the structure of each and every one of my trading strategies. Now this one calls for an entry on the reversal candle pattern, and that was on the close of that candle here at 1.7159. The CCI has to be printing, it has to print a lower reading than the previous day's high. The CCI reading on the previous day's high was positive 309. The CCI reading on the close of that reversal candle was minus 16. That's exactly what I want. I want the CCI reading to show a lower reading if I'm going to sell it, and it would be the exact opposite if I was going to buy it off of support. Now, once I have my entry, or my signal candle, which is my entry, 1.7159, I'm using a 20 pip target and a 20 pip stop. The 20 pips target is 59, so my first target was 39. That was support. The stop is a 20 pip stop, and it was right above the high. We entered here at this point, 1.7159. First target is down here. I'll go ahead and walk you through, and here is where it reached that target. Now it reached that target, that 20 pip target, before Non Farm Payroll was released, and I closed the trade and I was done. That's it. I don't expect anything more out of this. Now I've mentioned that if you can scale out, you could look for another 20 pips beyond that first target. But this was Non Farm Payroll, and this was getting very close to Non Farm Payroll. At this point I'm done with it, and I did not trade Non Farm Payroll when it dropped, or prior to that. That was it. I was done with the trade. We'll bring it right back here on this pullback. What I did do after this trade was closed, and as a result of Non Farm Payroll, I waited. I switched to a 5-minute chart with the pound dollar. I'll go ahead and do that now. There's my 5-minute chart here on the pound dollar. Let me bring it up to the live candle here. I apologize for all the bouncing around between time frames. I watched and I could see this reversal pattern developing here. So I started to look between the euro dollar, which showed this high wave candle here, and a lack of decision as far as direction. So I did not take this trade. But what I did was I traded the pound yen, and I went long the pound yen. I went long the pound yen because it made sense to me. I could see what was going on with the dollar yen and this reversal that I saw here on the pound dollar. Remember, prior to Non Farm Payroll, we sold the pound dollar and earned 20 pips, but I saw this reversal. So I didn't necessarily trade the pound dollar, but I used these other currencies as forms of confirmation for the only trade that made the most sense to me. So you can see with Non Farm Payroll, it did pull down and then it reversed and came right back up. So I had to just sit and wait. What I did was the same thing that I did with the pound dollar. I switched to a 5-minute chart, which is what we're looking at. Here was that 5-minute reversal candle, and I waited until it took out the high of that 5-minute reversal candle, and I traded it for approximately 19 to 20 pips. So we earned approximately 39 pips today with 2 trades. Very simple, very clean. So rest assured that if you're using the trade copier, this is exactly how I'm going to trade for you. I'm going to trade for you very carefully. I'm a very patient trader. I've learned that the hard way. I lost a lot of money, and it really forced me to become very patient. I'm aggressive, but not in the sense where I'm reckless. I'm aggressive because I will stay and I will put in as many hours as necessary to wait for my trade. I will manage my trade. I stay on top of the trades. I don't walk away from the trades. Again, if you want me to trade for you, I can execute these trades for you. Promise, I will make you a profit every 30 days. If I don't make you a profit in that 30-day period that you're using the trade copier, I will give you your money back. So again, thank you very much for watching, and I hope you have a great holiday weekend, and I look forward to trading for you.